My name is Dameon Russell. I am one of four co-founders of GCI, or Grow Centers International, the GCI Asset Fund. The question was, and thank you for the question, by the way, the question was, what makes the GCI Asset Fund as an investment opportunity so very attractive? What makes us unique and special as an investment, as an equity fund? So yeah, I appreciate the question. Let me go ahead and answer that. I'm going to answer that speaking in lay terms that I think are moderate or modest to sophisticated investors would understand and be able to follow. I'm going to do so in brief but in detail. So I think the best way I can do it is to kind of bullet the highlighted features of the fund, the equity fund, initially, and then I can go through and kind of elaborate one by one on those bullets if you allow me that. Again, I'll be brief but detailed. So if you're unfamiliar with this type of offering, please understanding that the GCI structure is very attractive. The return structure is attractive. The way we've set up the fund itself is attractive. This is a performance-based fund. With a performance-based waterfall distribution with very favorable terms for the GCI investors, or LPs. So let me get that out the way first. I'm going to refer henceforth to our investors as investors or limited partners, or LPs. I represent the manager of the fund, or the sponsor, or the general partner, the GP. So first of all, first bullet right off the top, the RIA, Registered Investment Advisor Fee. We're not taking one. So that right there makes us attractive to most sophisticated investors, the fact that we are not taking that fee. And I'll again elaborate. I'm just going to go ahead and bullet these features right now. We offer an 8% pref, or preferred return, 20% plus projected annual IRR, 16% plus targeted annual yield, an 80-20 split of the carried interest, and that's of course to the investor advantage, a 50-50 split of any annual surplus above the targeted 20% IRR. And we have an affirmative exit strategy to be initiated in year 7 or 8 of the 10-year term. These are the things sophisticated investors understand and find important, I presume. Starting with that RIA, again, the Registered Investment Advisor Fee is typically, on many funds, commonly 2%, and taken right off the top, regardless of performance. The fund doesn't perform, the investment advisor gets that 2% off the top. It doesn't matter. It doesn't matter if they outperform projections, whatever the case, that 2% comes off the top. We are not taking one. The GCI GP, or general partner, is not taking that RA, so there will be no RA fee, 2% or otherwise. The 8% pref, that means that GCI managers don't get a dime until the investors or limited partners have received 8% pro rata. The 20% projected IRR is certainly good, but we anticipate higher returns annually, and I'll address that in a second here. The 16% targeted yield is great, as some funds only have a targeted yield of 12% or 14%. So we feel we're very strong at 16%, and again, we intend for our investors or limited partners to do better than that in an annual yield. The 50-50 split of surplus both invigorates and incentivizes the manager to perform and provides a higher potential yield for the investors and limited partners, that higher yield potential I just spoke of. The 80-20 split of carried interest in favor of the investor, of course, is attractive as well, as some funds split the CI 60-40 or 70-30. So at 80-20 in favor of the investor, again, we feel that's a very attractive feature of our waterfall distribution, and makes this fund, this equity fund, a strong investment. Guys, this is a very attractive offering wrapped around a very worthy and worthwhile mission to impact the social equity imbalance within the most emerging space in recent history, cannabis, but to do so from a real estate fund perspective or angle. The GCI fund is performance-based, as I keep saying. The GCI fund performs as no other real estate fund can, and as no other cannabis investment opportunity is designed to do. And I'm going to explain why right here. Performance-based funds, particularly performance-based real estate funds, are framed by aggregate FMR, fair market rent rates. This is the schematic that determines top-line revenue. So, of course, the performance-based real estate fund, that's the primary function to determine performance success or lack thereof. The reason no other real estate fund can come close to GCI is that our real estate assets perform at 7x and even 8x, 7 times or 8 times fair market rent in most markets in our all-inclusive flat rate program. We cannot be beat at that level. For an even deeper dive, visit our website at GCIAssetFund.com. You can also visit our YouTube channel. Visit GCI on YouTube. We have a very robust channel there with a lot of detailed content, short videos like this one, others explaining the mission, and some of the other benefits of the GCI program. So I invite you to check out the website. Again, that's GCI Assets or AssetFund.com. Actually, we have both URLs, GCIAssets.com and GCIAssetFund.com, either one. And then the YouTube channel for an even deeper dive. You can request your prospectus today. This is an open investment ready to take your subscription, today, right now. You can or request your investment prospectus today. You can do so via email. Just simply send that request via email to invest@GCIAssetFund.com. Again, that's send your request to invest@GCIAssetFund.com, and we'd be pleased to get that prospectus right out to you. So that's been it. I hope I've honored my word to be brief but detailed, and I hope that our accredited, sophisticated, and moderate and modest investors were able to follow that detail. Again, the founders make themselves available if you want